And the great David Hochberg's here. I don't drink coffee, David, but the rest of the world does. What's going on at Starbucks?
Starbucks is taking it in the pants with their earnings. Their stock fell 20% on reported earnings. Because people, how long have we been talking about this? We will have a decrease in the inflation when listeners stop spending money they don't have on things they don't need and things they don't need to survive, like an $8 Mocha Loca Chocolaka Grande. Okay,
that's the actual name, by the way.
That's that's it. So that's what it is. Company-wide sales fell 4%. Traffic fell 6% this
and
past quarter.
And they're getting hammered in China, right?
China.
But it's good. This is good.
Same-store sales plunged 11% with an 8% decline in the average order. Management lowered revenue growth. Most loyal customers are looking for discounts. Okay, couple that with, guys, listen to this. What the heck just happened to it? I just lost it.
But if you're going to go to Starbucks and spend $6 for your regular coffee, and the reality of your financial situation sets in, why wouldn't you go to Dunkin' and spend half and just accept that you'll get used to it?
Why wouldn't you just make it at home?
Well, there's that too.
Here. Personally, I'm not a coffee snob, right? I don't understand the $8 coffee. You got Dunkin' Donuts and McDonald's that's got the same brown liquid. You throw some sugar and some cream in there. Who the hell knows what the difference is? If you're all, I got my iced coffee here. It cost me $2 at McDonald's this morning. Got 3 side eggs, scrambled eggs, which are delicious, by the way. A lot of people don't realize you get scrambled eggs at McDonald's. But here, I found it. Ready for this? DoorDash stock fell 15% after reporting a $21 million loss. Netflix fell 10% on the stock market after reporting weaker outlook for third quarter of 2024.
Is this the revolution you've been waiting for?
And that's it.
People aren't going to pay for this stuff?
Yes.
It finally clicked.
Here, you want to know who I helped just this week? 30-year-old couple, married couple. He's got 90 G's worth of credit card debt. She's got 25 grand worth of credit card debt, costing them on a monthly basis just to cover the minimums, 4 G's a month.
Holy cow.
Okay, I'm giving you what I'm talking about. These are the conversations I've had.
These aren't student loans for these guys?
They're student loans not even coming into the conversation. Another couple, ready? Okay, I listen, another lady. We're pulling out 16 G's to pay for her college, her kid's college education. Another 9 to pay off her credit card. Another 16 to pay off her car loan of $525 a month. All right, I got another one. I got another couple, $57,500 worth of credit card debt, and they've got the only thing they have is the equity of the home that they've accumulated over the past 4 years. During the COVID crisis, craziness of the real estate market. We are at a breaking point. I've been talking about we have met and crossed over the inflection point. Okay, you were talking about your textiles BS, whatever the hell you got going on with linens and all your but
I don't think textiles BS is very kind.
Well, I think it crosses all the industries, and I was telling you an example of a story I heard where as a small store owner that buys fabric said, I can no longer afford this from the distributor because it's too much money and I can't pass along that expense to my shoppers.
Correct. So what happens? Okay, let's do a little Econ 101. That store owner doesn't buy that expensive linen from the supplier. That supplier doesn't have stores to sell that expensive linen to. So that linen, that expensive linen, sits in their warehouse accumulating dust. So the manufacturer of that expensive linen that's accumulating dust isn't making that expensive linen, so they're making something less expensive or laying off people at their factories, which is bad for the workers, but it's good for the economy. Because then that linen, that expensive linen that's sitting collecting dust, one day will not be as expensive because they want to get it off their freaking shelves and move it to replace it with another product that your tchotchke people and I was joking, you know what I mean? You know, but your craft people can afford because they can't afford the expensive linen.
But times this specific scenario by
1,000 and we break inflation.
What's the timeline? I know nobody knows, but tell me.
Yeah.
Tell me anyway.
I will tell you just my personal experience, just seeing the credit reports that we're seeing and the stress that the homeowners are under, and thank God these homeowners have equity in their home. I would say that by the time they they stop doing the ostrich technique and get their heads out of the sand and do a cranial anal extraction and say, I need some help, to stop spending money. You know what I told the guy, okay, newlywed with the 90 and the 25? I'm like, you're going to buy gauze pads, Neosporin, and ice packs because you're going to have a lot of happy time with you and your wife because that's all you're going to be doing right now until you pay down your debt. Okay, I go, you're going to have a lot of happy time. Okay?
You're like a reincarnation of Dr. Ruth Westheimer wrapped up in David Hochberg.
I'm a little taller and heavier.
And he's throwing in finances in the middle of it.
No, I'm just telling. I mean, I'm trying to be real with people. Okay,
Here's another conversation I had this weekend, which is part of your world. You've talked about housing inventory being low forever.
Yep.
The prices of houses are through the roof. You still have the 7% interest rates and plus 7% interest rates.
We're on the way to 8.
On the way to 8. And you still have bidding wars for people because they have to buy houses, the ones that are available.
Yes.
So here's the thing. My house is worth more than I ever thought it would be worth. It's also paid off.
Right.
So we've had conversations about, well, we should probably sell it and take the win, but you got to have a place to move.
Yep.
And you're going to overpay for the place to move now.
Yep.
Unless you tell us the good answer.
And pay a higher interest rate, too.
Well, here, in that situation, I know where you live, okay? And I know that area where you live. The double wide trailers are going for,
They're good. Plus, I put a new hitch on mine.
And the above ground pool, which is fantastic.
It is inflatable, but it's good.
It doesn't where it's still above ground. So you could get so much more money than what you could have got in 2020. Your place is worth, I know for a fact, 40% more today than it was in 2020, just because of the COVID craziness and the lower rates and people aren't moving. So you could go where you want to go. And I know what your real estate taxes are. Okay. I'm very well aware.
They're high.
Right. Yeah. They're excessive. Right. So, you take all of that savings and you go into a different place. Yeah. You might be paying more money, but look at all the equity that you've made over the past 4 years, right? Since March of 2020. Over the past 4 years, you made 40%. You've never seen that type of appreciation in home.
So take your 20%
Cash
win.
the chips.
Take your 20% win that you'll have net.
Yes.
After all of this.
Yes. And guess what? Eventually, the same thing will happen in the real estate market that's happening in the linen and the expensive linen market. Things will calm down. The prices will cool off and rates will come down. And then guess what? You just refinance.
But when?
Well, listen, if I was that smart, you think I'd be sitting here, schlepping down here and sitting in traffic for an hour and a half?
Yes, because you love us.
Yeah, that's exactly right.
I'd be helicoptering into the pad above the Sheridan, okay?
No, that's not untrue.
I'm hoping in the next 6 to 12 months we're going to see some type of relief. Listen, we've had 30-plus months of these rates being where they're at. I know you got to go to break.
You want to hear the screeching sound of a balloon when the air is being let out as a signal that we're going to be okay.
Slowly.
708, good morning, Steve. As with everything, it's cyclical. We're spoiled. We had no interest for years.
Yes.
Now we're getting hammered, and we're whining really loud. Suck it up, Buttercup.
You dumped $4 trillion into the economy, and people who got money, who didn't need to get money, got money, and what did they do? They spent the money they got. And that's why we're in.
The second they got it.
And we had supply chain issues with China. We couldn't unload boats, which,
By the way, it's China.
China. Okay, we had problem with China. We could land a force on Normandy for D-Day, but we couldn't figure out how to get 100 ships unloaded off the California coast, which completely blows my mind. Okay,
630 texter. Yep. Have Dr. Most come in next time Hochberg's on with 3 blood pressure monitors.
Smart.
855-56-DAVID, 56david.com. Team Hochberg can help you like they helped us. Go ask. Ask for the help.
And Mazel Tov, great name with your granddaughter. You told me it's Elise, which is my wife's
like your
name.
wife. Your wife's
congratulations.
Lovely. You, not so
You'll
much.
never forget it.